I'm going to start with a bit of a controversial question. And as marketers, this is probably like the dumbest question to ask, given that this is one of the biggest times in our calendar year. But if Black Friday disappeared tomorrow, would our clients actually care? Who wants to go first?
I will. And I'm layering on my own bias here. I would say no. I'd say like the first year they would, because they'd be looking at, comparisons of year-on-year sales and how much it was down versus last year. But I think with more of a kind of long-term view on and getting, protecting their margin, protecting their brand and getting quality customers who are shopping with them full price. No, I think everyone finds Black Friday pretty painful and play.
It's funny because we're seeing a lot of negative news around Black Friday, from third parties like Witch.com and independent people as well. And a lot of discourse on LinkedIn as well. Like a lot of people saying if it disappeared tomorrow, I just wouldn't care. So it's just trying to put that onto our clients. I don't know about any of you guys, like what you're seeing. Obviously, Carl, we work together, but your opinion as well. What do we think in terms of our clients? Like,
this is my 11th Black Friday, as you can tell from the strain. I think there will always be points in the calendar where there's high demand to buy a product. So there's almost kind of a psychological contract going on where people know that people are likely to buy at certain points of the year. So I think if Black Friday disappeared, I think it would bleed into the rest of Q4. We've got Christmas and we've got other calendar events. I think that's probably likely to happen, I would say, within the next 10 to 20 years anyway. I don't think it's conceivable to think brands can keep dishing away all the profits. And even though everyone kind of talks about improving the average order value and looking at customer lifetime value, how we were talking just before, actually, how valuable are those customers around this time who just come in for the discounts? And so that's the question we need to ask.
I think that's an interesting one, is it, about the customers just come in for the discounts? Because I think when you look at the lifetime value of a customer that comes in over Black Friday, it tends to be a lot poorer than your other customers that come in maybe other times of the year. And I think if Black Friday did go away, there's a lot of chat about, you've got to retain a customer and it's cheaper to retain a customer than to acquire one. I think that would hit home a bit more, rather than I think at the moment of using Black Friday sometimes as, okay, this is the cash injection we need to give us a good year. That mentality, I think, is bad to have generally, in my opinion. I think because in terms of pressure it puts on the business itself and the people, but secondly, if it doesn't go to plan, well, what does that mean for the health of the business as well?
I think it's really interesting because as much as we probably all loathe Black Friday, I think it's interesting when you watch brands that don't participate in terms of actually discounting. So brands like Adenola, Hawkstone. Adenola was up 77% versus the pre-Black Friday average. No seasonal discounts. They're offering 10% off if you sign up for email. So the good thing about Black Friday, to put a positive spin on it, is the fact that it's priming consumers to shop. And that day is still the biggest day for a lot of brands in terms of trading. But I think it's the brand's responsibility to approach it in the right way, to your point earlier, in terms of attracting the right customers and protecting margin. So they need to have a really clear view of profitability and do it in the right way.
Yeah, I mean, one thing that drives me crazy, especially about LinkedIn, about sort of, September time is, you'll get brands saying, not sure what we should do for Black Friday this year. What offer do you think? Should it be 30% site-wide or should it be 10% off the first day? It's like, how can you ask that question? Because ultimately it's got to be about surely what your margins are.
Yeah.
We've got a brand that I was speaking to recently. Their gross margin is 15%. They haven't got a lot to play with. And they were still thinking about doing a site-wide discount. It's like, I don't understand the mechanics of how that works.
Well, I think, and I agree, but there are also brands that are available across sites like John Lewis or Amazon or M&S who need to also be benchmarking with what they're going to be offering, or they're going to lose. I mean, they'll still get the sale, but it would be on those sites rather than their own site. So I I remember I was working in-house at a shoe retailer. We were always kind of keeping an eye on what, House of Fraser and Debenhams and John Lewis were doing, who were also selling our products, and like literally sitting there ready to press the button if we didn't know when they were going to go live and when were we going to go live. And it was all quite, there's also that benchmarking piece where you have to kind of think about where else your product is available and what's happening.
That's a really good point, actually, because especially with some of the retailers that are being housed in John Lewis, House of Fraser, Harvey Nicks even maybe as well, is that even if you are an independent brand being housed in a large, department store like that, they have much more room and much more margin to play with across the board and can destroy your brand equity like overnight, really, just within a couple of days. And I know that's a bit sort of like catastrophizing, but they have way more to play with than the actual brand itself. So is that a bit of a sort of conflict of interest in terms of brands doing Black Friday, Cyber Monday, when the actual department stores, they're doing them as well? It's like that constant fight. Is that what you were seeing?
Yeah, we were kind of benchmarking and trying as much as possible to communicate with them and understand what their offer was going to be, and be able to kind of, look at the market and see, okay, where do we need to go in? But it was more about the launch date as well. Like we were literally sitting there going, okay, do we go now? Okay, oh my God, John Lewis, we've just gone live. Let's go live and launch it. It was a bit like that. So it was, stressful.
I mean, obviously we're from various disciplines within marketing, and Will, you're kind of both sides. You're sort of like that fractional growth partner working with the brand, and we all work with the brand. We're all sort of partnering with those brands. But from a really sort of honest point of view, was Black Friday a struggle this year?
Well, I mean, I can give you some insights. My feeling is that, particularly in the UK, there was a much more of a. I mean, we had the budget on the Wednesday, the UK budget, which I think there's still like there's daily kind of news about. I think the buying confidence in the UK certainly is worse than it was last year. So I think that certainly has something to play. I think my general feeling is that if brands kind of activated in October and brands looked at, developing a relationship with new customers earlier to expose them to the products that they are likely to want to discount in that period. I think generally people will have had a better Black Friday. I think dropping it last minute with no precursor, I think we'll have seen some sporadic buying patterns. And I think those brands as well that potentially have been a little bit more selective in their discounting structure will have probably done a little bit better, I imagine. As you say, not every product's got a different profit margin. I think just running after vanity metrics like achieving last year's revenue is just stupid, right? We don't want that. We want sustainable growth, and I think those brands that have spent the time to look through the numbers and really understand where the inflection point of worth is will have done okay, I think. And that's generally what we're seeing, is that we've probably matched on most occasions revenue, but profitability is way better.
What about from the UX and conversion rate optimization side? Like from your point of view, Carl was talking about them, because obviously we're paid media mainly and we look at trying to ramp up to that kind of event. When should people be looking at, their site? I mean, obviously the answer is going to be always, but before, in particular with a big event like Black Friday, Cyber Monday, when should they be looking to implement those changes or gear up for such a large event?
Yeah, I mean, we generally start testing towards Black Friday in July, because it just then gives us plenty enough time then, depending on the site traffic, to work out if there are going to be some fundamental architectural changes to the site. And then secondly, then doing some kind of sub-offers that they're thinking about at that time. And look, the reality is most brands aren't in a position to be able to then say, look, that's a decision we're going to make in July about what we're going to run. I think the interesting thing this year, I think probably, like Carl was saying there, is that the ones that have been a bit more clever with their discounting strategy is that, are they presenting bundles? Are they presenting subscriptions? And are they presenting single purchase? And I definitely think, this year in 2025, bundles has been much more utilized by brands previously from an on-site perspective, because not only does that give you then more options to the customer, so you can make it feel more personalized, and that we're an e-com, we love that term personalized. But what it also means is then you've got a much better opportunity to increase the AOV. So we've got one personal care brand in the States. Last year, they did a site-wide sale. This year, they purely just used bundling to incentivize the sale. They were 165% up in terms of revenue in the same period. So, there's lots of factors obviously at play here. And I know, look, you can cut data whichever you want to, but with that significant level of difference, there is something in that, the way that those offers and the way the discounts are framed, rather than this kind of, site-wide X amount off.
Yeah, I agree with that. I think bundling this year has been a big lever for some of the brands that we work with, particularly if you've got resellers that sell exactly the same product. So you can be very strategic in terms of what products you include within those bundles. But yeah, we saw one client this year that was doing a lot of sales activity, generally doing quite specific flash sales across the period. But bundling was a massive part of it. Higher average order value, more profitability. I think underpinning all of this is you need to have that view of profitability on a daily basis. You can't get to the end of the period and realize you've wasted a load of money. So it needs to make sense. In terms of whether it was, I guess, a good Black Friday versus the previous years. So we do an annual report where we look at, previously it was 10 of the fastest growing and profitable e-com brands in the UK. This year it was 15. What's interesting now is because we've done it for 2 years, we compare the year-on-year data. Off those brands that we tracked last year, there's 25% up year-on-year in terms of Black Friday, 125 versus 24. And most of them were all up, and there's one exception, I'm not going to call them out, but they were down. But yeah, I think it was a really positive year. And also looking at our client base as well, I think it was a really positive year. So I feel like it was a real positive Black Friday period. I don't know if anyone's got a similar view or...
Yeah, similar for clients that I'm working with as well. It was positive. And to talk about bundles, like another thing I think I saw that was a bit different this year was adding on a free gift. So I think every year the time period of the promotion and the discounts are creeping up, which is what I find concerning. I think the average discount I saw this year, and I'm kind of mainly focused on the kind of fashion beauty space. So it was more kind of, previously it was 20, now it was 25, 30 was probably the average I saw. But what some brands were doing as well was adding on a free gift with that, whether it was like a free full-size product or a free tote bag or something that was helping that kind of extra measure to get people over the line, I guess. So yeah, I think that was something I hadn't really seen before, which seemed to be effective.
Nice. And just sticking with you, Hannah, just for a second, like in terms of email and looking at those retention pieces, what kind of behavior happens leading up to Black Friday, Cyber Monday? Like, what are you doing practically, in terms of implementation? What's the mailing list behavior looking like? How are we segmenting? Like, are you able to sort of give us a little bit of insight into that?
Yeah. So Black Friday is a time where you want to kind of reach out to your full list pretty much with those offers. So in the lead up to that, not only trying to grow your list with new subscribers by kind of hinting at, you'll be the first to get our Black Friday deals, but you're also testing and trying to warm up those audiences which maybe you don't send to that frequently, who you haven't spoken to in a while, so that your deliverability isn't like hugely affected when you do go out to the full list for Black Friday. I think the other thing is you're kind of mapping out your flows and like tweaks that you're going to make. So whether you're going to put in banners to them that are kind of highlighting your offer, whether you're going to kind of shorten the time frame of things like abandon checkout and abandon browse. So brands typically kind of prep those changes beforehand, and you can now kind of schedule flows to go live at certain times, which is great in Klaviyo. What else are people doing in prep? And I think the other thing is looking at the customer segments. So things like, okay, let's get a segment of people who shopped with us last Black Friday and haven't shopped with us since. Let's get a segment of our VIPs and give them early access, or our members and give them early access. So kind of looking at your segments and how you're going to communicate to them what offer and when, and kind of mapping that out in your plan as well.
This information is really, really interesting, Will. Can you just sort of let people know, because you did this last year, what made you want to do that? it's craziness.
Yeah.
We'll link, actually, if you don't mind, when we release this, we'll link to your research, if you don't mind, because
Yeah, of course.
it's incredibly comprehensive and it's very impressive. So, but yeah, what made you want to do that?
So we launched Growth Society last September. We decided to focus on e-commerce in Q4, so we had a lot of time on our hands. And we wanted to, I guess, come up with something that was genuinely valuable for the industry. There's a lot of noise out there. There's a lot of data. Often it's panel data. We wanted to get some real proprietary data based on trying to identify signals, I guess, from some of the top performing brands, and they're profitable. So what can we learn from them to help our clients? And at that stage, we had very few clients. Come Q1, luckily things picked up, but it's just been so useful, because if someone comes to me and asks a question, like how often should we be emailing? What should we be pushing beyond just promotions? We've got all of this really good data we can compare it to. It's very manual. So we're making physical purchases from these brands. We're becoming customers and we're tracking everything across all of the creative, the email activity, what they're doing from an on-site perspective, tracking delivery times, the cost of postage, the returns process, all of it. It's an absolute nightmare, to be honest, but it's really useful. So yeah, I mean, this is the day after kind of, I guess, this period is finished. So there's a lot of time to kind of digest, I guess, get the context around it. But some really interesting numbers and some real standout brands that I've not even come across before that have, achieved some really impressive results. So now we're going to go into the data and just digest it all.
Amazing. Carl, from a paid media point of view, and everyone's linked to this as well, because I think obviously we're representing different parts of the customer journey, which is actually quite nice. I think, I don't think I've ever been part of a conversation like this before. But from a paid media point of view and a creative point of view, what was winning this year? I know, very broad question.
Yeah.
As if trying to hook people in for Black Friday or trying to hook new customers in specifically, what's winning?
So yeah, the big thing, particularly on Meta, is creative diversity. So we're seeing with the Andromeda update, and everyone's going to fall asleep with this geekery that's going to come out. But essentially, Meta's come out and said what we were all suspecting as marketers, which is it will favor a rich palette of different creatives in order to find the perfect ad for the perfect persona. So in years gone by, you might have had, say, 20 ads, and in your head you're going, great, well, I've got 20 ads, I'm going to make, I'm going to see 20 different kinds of results. Meta have basically now said that you may have 20 ads, but we see 5 different ads, and that's called an entity ID. So what we've seen in the last year really is a development of that. Meta's finally told us that's what it's doing, which has been helpful because it's kind of opened the black box a little bit, and that's allowed us to really categorize what we think each bit of creative's doing, and what the persona is, what the hook is. As far as reaching new customers, we've been spending a lot of time looking at incremental reach. So every time you launch an ad, we're looking at CPMR, which is essentially the amount of visibility. It's like a little spike in reach that you get when you launch a new ad, and that's basically Meta trying to find that new audience. So the idea is if you've got enough diversity in your portfolio, you should be able to drive lots of spikes in new reach to be able to drive growth. And we found that the brands that have done the best have done that the best. The brands that have done the best have done that the best. The downside to that is that it's very resource intensive. The kinds of assets that are quick to create, like statics, tend to burn brightly and then die quickly. So the flywheel of creative is really important. And from an agency point of view, a paid media point of view, we're trying to support our clients in mapping out that kind of sunsetting and when you're likely to need to replace that, so that we can keep the growth of the account.
How does that relate to what you guys are seeing from a conversion point of view, from a retention point of view, and from like that whole sort of ecosystem point of view? That big update is basically a trickle down effect, isn't it? So like, what are you guys seeing from that?
It's causing some challenges, I guess, for more premium brands, where it's all about consistency, and they might want to show up in a specific way and be quite stylized in terms of how they approach creative. they might not be as comfortable as leaning into things like UGC, which naturally creates a lot more variety. So yeah, it is challenging for certain brands. It was always about matching luggage before and being consistent in terms of how you show up in a certain way. I think it's a lot easier for other brands that naturally lean more into things like UGC and are happy to kind of test and evolve things. So I think it's just, it's understanding the best way to approach it for different categories. But we definitely saw that in terms of the report this year, just a lot more diversity. We use Foreplay to track all the creative. So we've got a specific board set up for each of the brands. There was definitely a lot more variety this year.
It's been interesting to see the chat about AI and the use in Meta. As a pretty horrendous ads for the likes of Range Rover, where a 4x4X like a bus. So I think that's an interesting one in terms of trickle down effects on us. I think it's difficult obviously to say, but that's one thing that we need to be concerned about as a CRO agency is what's the quality of traffic that we get in, the volume of traffic that is happening. And that's kind of, I guess, we're kind of waiting to see what the impact will be maybe into next year as well.
Yeah, because you really are that central cog really in the whole journey, aren't you? Like, if we're talking about high performing assets, that is the central hub.
But I think this is the thing, that I always talk about is that I think we've got to a point now where, particularly, I think in the US, there's been a realization for a couple of years now, but I think in the UK, there's this realization that you can't, for Black Friday or any part of the year as an e-com brand, do PPC for 6 months, do email for 6 months, look at growth for 6 months and move on. All of these factors need to be at play all the time so that actually everything is threading together. And, people watching this might say, well, you are an agency, of course you're going to say that. Well, yeah, of course I would. But if you think about in this situation, if you had a dog, would you feed it for 6 months and not feed it and then take it for walks for 6 months? You would you? I mean, that's what I mean. And then you got to think about it the same way. The business is a living, breathing thing. All of the things that we do within businesses need to sit nicely and tightly together to get it to function.
Absolutely. What about you?
Yeah, I agree with that. And I'd say, not to get my violin out, but I think with all the challenges and focus that there's been on paid, I think email and CRM and retention gets overlooked. And I'm finding more and more conversations with brands in the last year is, we're just going to try and do it in-house and see how it goes and we'll come back to you. And then lo and behold, they come back to me in 6 months and they're like, it's awful, can you help me? I agree. I think everything needs to be looked at as a kind of a holistic piece. And it's so important if you're spending, budget and effort and resources at the top of the funnel, if we're still looking at like kind of traditional funnel, that you're making sure that you're driving lifetime value and repeat purchase with email and all the other CRM tools. So yeah, it needs to be kind of included in the mix.
Yeah. Holistic, I believe, is the word we like to use, isn't it?
Good word.
Okay, so moving on, and this whole discussion has kind of been themed a bit of a post-mortem. So we want to like really dissect and understand like whether Black Friday is dying a death or whatever. But what failed this year? Like, where did brands fall down? And what can they do to rectify that for next year, if there is a Black Friday next year, which of course we all think will be. But what went wrong? Where did people fail?
I think, looking at the data, and again, we're fairly early in, but I think looking at what we can see so far, in terms of the discounts that are given away this year, it was about 2.5 times on average what they were doing last year. Now, at the same time, overall revenue gross sales grew by about 66% on average. But I think what I'm interested in is there going to be some of that margin erosion from the perspective of Black Friday, Cyber Monday? And equally as well, what is the quality of that customer going to be from a lifetime value perspective over the next 12 months? So I think it's a difficult one. I think we've kind of talked beforehand about sort of the state of the economy and how things are. There was a necessity, I think, to do that this year, but whether that is a good thing for the health and wealth of those businesses, I'm not too sure.
I think especially so similar to last year, Black Friday fell on payday, and it's also shortened the gap between now and Christmas. So it's looking more holistically across that period to actually understand, how did they perform beyond Black Friday? And it's really interesting to see the data. Brands like Adenola and Hawkstone that don't do any discounting had a better consistent sell through all the way through to Christmas. So completely agree with that. But ultimately, these brands have to have the right reporting in place to analyze that. And there's still a lot of brands that don't have the LTV analysis, that don't actually understand profitability on a daily basis, or it's just data that's sat in different teams. So you need to have that central view of it to make the informed decisions.
Where do they fall down in email?
Yeah, I think brands that were thinking across channel perform better. So those that were bringing in things like SMS, because it's getting increasingly hard to cut through the inbox. So SMS, even, programmatic direct mail as well, push notifications. I think also those that didn't kind of show their intent to the customer. So I think, there were some brands that launched their offers really early in the month, and I think customers kind of want to know what you're doing so they can either save their money to shop with you or not. So I think it's important to kind of reach out and say, there were some brands like Anya Hindmarch, you're like, we're not doing Black Friday. It's not in line with our brand values. Just letting you know, and here are our brand values. Amazing piece of like brand building and content. I think it's important, if you're not taking part, to kind of let your customers know and why that is. And then if you are, to kind of build that anticipation ahead of you launching your offer. So you don't have to feel the pressure to kind of bring your offer forward to the 1st of November, but you can do things like ask people to kind of start saving wish lists, and that's amazing data that you can then use after Black Friday and beyond, right? So I think like showing your intent and letting your customers know what's coming, hopefully,
Nice.
to kind of reserve that space in their wallet.
I think you raised something which I'll come back to in a second, but before I come to that point, Carl, any paid media and creative fails that we've seen this year?
I think one thing that we have to probably mention, I think, is just from a Google point of view, when people have structured accounts with kind of a global PMAX account and haven't built in any kind of zip codes to escape when the CPCs in certain areas like eventually skyrocket. So I think one thing that we've been really cautious of in all of our accounts is to monitor CPCs, and when they kind of get ridiculous, which can be as a result of the proximity to Black Friday weekend or to new competitors in the bidding space, to either extract products out of the PMAX campaign to enable continuous optimization, or if which we have done in certain areas where there's the very expensive clicks, we've actually carved out a shopping campaign with manual bids in like London and Birmingham and Manchester, so that we're not at the will of this kind of this freight train that's going 1,000 miles an hour and swallowing all of our budget. We've got release codes and levers to control the chaos. And I think if Google would have their way, we'd all be in one campaign and we would be road match and just spending millions of pounds.
That's what they keep advising.
Yeah, I mean, yeah, that's what we keep getting told. But in the interest of profitability, we try to kind of keep a rein on that and not necessarily do it as they may want us to do it by the book, I think.
So just coming back to an earlier point then around transparency. I think transparency around Black Friday and Cyber Monday, and I think Q4 in general is going to be really important moving forward, given I think there's been a huge shift in consumer behavior, and I don't know what your individual thoughts are on that, but are consumers just waiting for Black Friday now because they just know that it's a marketing play? Like if we go back to what Black Friday actually is, it's only like sort of 10, 12 years old. It's from shops going from in the red to the black, making lots of money from, poor consumers. Is there an area of transparency that is needed now, because everybody just bloody knows what it is. And now we need to sort of play that tactic now. We're marketers. We need to play the land that's in front of us. Is this just a ploy now?
I think a lot of people are cynical of the actual value of the deals that are on offer. But also they do know that it's probably the best time of year they're going to get that deal. It's interesting to see, I don't know if everyone's heard of Rufus, Amazon's kind of AI agent, but that actually allows you to compare the prices over specific periods. So I think there's maybe a bit of a push to provide some more transparency. around that. But it's a really hard thing to determine as a consumer if you are actually getting a good deal. I think with the economic pressures, obviously people are looking for deals. They are looking to save money. So naturally they will probably focus their purchasing behaviour around this period.
Yeah, I haven't. I mean, I bought quite a few things in Black Friday, but none that I wouldn't have bought anyway. So they're like regular purchases or something, Christmas presents essentially. Like I wasn't like in a frenzy and ended up buying loads of things off, I don't know, whatever website because I had 30% off. Like I intentionally was like, I will wait till then and I'll get a better price for my Christmas presents. All these things that I'm buying every month anyway.
But no, I think that's representative, isn't it, of what we're all seeing, especially from a paid media point of view, and that's all we can kind of sort of talk about really, I guess. But we're waiting for that sort of time of the year for that new customer acquisition. And I don't know, from a conversion rate optimization point of view, if you're seeing those spikes and then going, well, that's clearly people have waited. It's just they're playing us, or are we playing them, or is this them getting back at us now?
I think, right, everyone said it, there's definitely an expectation of it. And I think, going back to the first thing we talked about at the start, like if Black Friday was no more, what would you do? And I think last year we had a big shift in the market from people looking at subscribe and save to going towards memberships, where you kind of take the Amazon Prime type model. So a lot of beauty brands have done it, where you're paying between sort of, 20 or 30 pounds or 20 or $30 a month. And then with that, then you've got a set of benefits with it. Now, I think what that does is that probably, to your point, Anna, about you wait for that period, does that flatten out your cash flow throughout the year because you then don't have that built up latency you get in November? And I think, again, like we've already said already about, it'd be interesting if you took Black Friday and say put it in July, what would the effect from a business be? I think we're very different because, like you say, we're using it as a cost saving measure for Christmas gifting and all that sort of side of things. And you said that about was the meaning of Black Friday. Should it be called Red Friday? Because so many people are getting themselves in a tiz when it comes to offering discounts their brand can't really afford.
Well, this is what I was going to ask next. Is this even still profitable for brands? Should they be running it? Are we going to see more drop off from brands participating in the years to come?
I think it can be profitable. I think it just needs to be done in a slightly different way. And we've seen I think wholesale changes in the approach, particularly over the last kind of 10, 11 years since I've been advertising, which was 50% off everything on site. Oh my God. And you sell everything out. And then you go into 4 weeks of panic distribution, trying to get everything out the door and, getting sworn at by the postal drivers and stuff like that. But I think, even in the last couple of years, I think the aggression of site-wide discounts aren't as I guess big as they were. And I think it depends on the industry, the sector, and I guess the number of SKUs you've got on there, the relative profit margins. But I think it just needs to be sustainable. It needs to be, not just from a profit point of view, but also from an inventory point of view, because we've got December, we've got the kind of 3 week run up. It's the same as last year. We've got 3 weeks until our shipping day in December. Then we'll have like a week of kind of chill time between the 18th and the 25th, and then it'll kick off again in Boxing Day larger. That's the pattern that I think a lot of e-coms will follow this year. And there's no point in having zero stock come January, February, and not much money in the bank, because you've kind of got a swollen revenue line for November. I don't think that makes sense.
I think a lot of this is being led by the fashion industry. And particularly for a lot of fashion brands, they have to sell out that stock because they've got new collections coming in. So they're super aggressive in terms of discounting. Gymshark this year, I think it was similar to last year as well, but 50% off up to Black Friday. And then they had an extra 25% off on top of that.
Must be running at a loss, maybe.
I don't know. Without, obviously, one of our strategists used to work there, but I can't reveal any numbers. And that was quite a few years ago. But it's, other brands will look to those brands, and the danger is they copy them, and they don't necessarily understand the financials behind what they're doing. And this just seems to have a knock-on effect to other categories that don't really need to be doing that. But I think a lot of it comes back to actually how much brand demand and brand equity have you got. So if you're an Adenola and you've got a load of people searching for you and you're part of your community anyway, you don't need to discount. You can hold firm. Whereas if you're in an industry where it's a commodity or there's a lot of competition and there's not that brand demand there, you can only really compete on price or value adds. So it does change across different sectors. But I'll keep coming back to this. Ultimately, it should be profitable for brands. I guess there is times where a brand just has to make cash because that's what pays the bills. And rather than have a load of stock that's, costly to stock, and they might have a new collection coming in, sometimes they will just switch to cash flow instead of profitability.
Is this still worth it for smaller brands? Is it a race to the bottom for them?
I think Will made a really good point. He was kind of alluding to kind of what consumers expect, and that's based on their buying exposure, right? So one thing that I remember, I started an e-com many years ago, and it was before Amazon became the Goliath that it was, and there was a definite change in the buyer kind of expectations when Amazon next day delivery came about, and as a result, all of a sudden everybody's distribution had to up. Even though you might have been a small independent kind of player, you had to be able to match this multi-billion pound Goliath as far as distribution. But I think the same can be said from a sales point of view as well. And if you've got the average consumer looking at their news feed and everybody's giving me 50% off, but this 4-man little e-com Shopify store are only giving me 10% off, I'm not going to shop there. I think there is a responsibility, albeit I don't think anybody talks about it, that we probably need to be painting a fairer picture and maybe not putting all the different kinds of e-coms in the same buckets because they don't have the same resources. And I think I think that's something like maybe an Etsy buyer is a lot more forgiving than maybe somebody who just sees an ad on Meta as an example and doesn't really know the size or scale of the company.
Will was saying earlier about Adenola and Hawks and not discounting. If you think of those two brands, they've got elements that we would kind of talk at in CRO to convert people to. So it's high quality of product. It is notoriety or kind of PR around the product as well. Easy to use sites, great delivery terms. So I think that's the thing. Is like if you're a smaller brand that can compete on that level, do you then need to pull the trigger on the price factor? Because like you say, people are still shopping at that time. And it then also, I think, probably gives you more strength in the brand because people then see, well, actually, these guys don't need to discount. And do we get better quality customers off the back of it? But, going back, you mentioned Gymshark there. I mean, look, 2-3 years ago, if I had £1 for every time a brand can build a web shop like Gymshark, we'd be millionaires. And this is endemic in e-commerce, I think, is that everyone goes, oh, I want to be like X person. But you haven't got their customers. You haven't got their brand equity. And we've got to just sit back and say, right, if there's one lesson we can all learn from it is ignore what else is going on to an extent, look at your own stuff. What is in your basket right now? What do you need to do? What can you afford? And then make decisions off that rather than going, okay, well, X guys are doing it, we're doing it, which I think happens a hell of a lot of the time.
That's the race to the bottom, isn't it? You're just copying carte blanche off everybody else. Hannah, you work with predominantly luxury brands. What about the smaller luxury brands? Like, how are they competing in Black Friday, Cyber Monday?
Yeah, so the clients I'm working with did run offers. They kind of did a not any longer than a week, but kind of a 20% off. I think for those brands that are growing, it helps them get their product in more people's hands and then hopefully have an amazing experience and then they come back and shop again full price. And I think those that have a kind of standard 10% welcome offer, it's only an extra kind of 10% on top of that. So yeah, they did take part, and it has, I haven't looked at all the figures yet, but I think it went well for them.
Something a little bit different then, because we want to be proactive about next year as well. Obviously, we're in the middle of Q4 when we're talking about this, so there's still plenty of work to do. Sorry, guys. But looking towards next year, some valuable tips that we can give brands and even their sort of in-house marketing teams as well in terms of what they can do next year to fully prep better. So just starting with paid media, just because that sits quite nicely at the top of the funnel. 2 things that they can do or should do. I don't like the word should, but what can they be doing next year to improve?
So I think filling the funnel up, the top of funnel up as early as possible, because it's the cheapest kind of thing to do. And I think the other point would be to have at least 3 months runway when it comes to creative, and probably prioritize video diversity in the mix. I imagine that will still be probably the predominant lever to pull, but yeah, that's probably what I would say.
Nice. Adam?
I would say look at what are your toxic products or your toxic bundles. And what I mean by this is that if you look at the data, what you'll see is that there'll be certain products that were sold over Black Friday with a certain discount that will lead to a much lower LTV customer over the course of the year. And certain combinations of products will lead to higher ones. And I think tracking that as a cohort of those different groups over the next year, that then should be able to determine to you what your bundles and what your offers are going to be at the right time next year as well. So keeping eyes on what those new customers coming in, buying those products, what those bundles are doing or not doing.
I'd say don't just focus on email. Make sure you're looking at your other channels like SMS. I would imagine WhatsApp will be playing a much bigger role next year as well. And then also don't neglect your automations and your flows, and think about what changes you're going to make to them, but also specifically the post-purchase journey. So for everyone that shops with you on Black Friday, what are you going to do with them after to try and nurture them to come back and shop with you full price?
I think digest what happened this year. I think it's really important that you reflect on what worked, what didn't work, and put a plan into action. I think it'll be different for each brand. I think I've definitely seen a theme this year in terms of people investing more in conversion and CRO, and also email, and really focusing on that kind of longer term sustainable growth. I still think creative is one of the biggest levers you can do to bring down your acquisition costs. And I think it's about thinking about how you could provide value. So how can you participate around this period without eroding margin? Free gifts, bundles, that type of thing to really get the average order value up.
Nice. Well, I heard some rumblings last night that ChatGPT are playing around with the advertising services for themselves. So I wonder if we did this again next year, if we're going to be talking, if that whole discussion is going to be wildly different, and we're talking about how people are using ChatGPT. I mean, they're already using it for search, but how are we going to be using it for shopping next year? So I'd like to sort of kick that off and go predictions for next year. What do we think? Better or worse than this year? What new channels are going to be playing a part? What brands are going to win? What maybe won't win or lose? Predictions, guys?
Well, just on that point, I heard a stat this morning that 56%, I think, of people are using AI for product searches.
Wow.
I also heard from a friend the other day that he researched and bought a car without even seeing it in person through OpenAI, ChatGPT. So I think it's going to be a massive shift. And yes, obviously the next stage is, obviously they've got the checkout functionality. People are already using it. We're going to see less and less people interacting with the brand's websites and going through the whole journey, beginning to end, through the AI tools. And it allows you to compare lots of different retailers and prices. It allows you to track the best prices across different places. So I think it's going to be a massive shift.
It's interesting with that though, because I literally did that, but with a race bike.
Right, okay.
And I told it my height, my weight, what kind of journey I was going on, what kind of brands I like, what kind of frame I wanted. And it returned the perfect option for me. And then I found a secondhand one and went and bought that.
Mm-hmm.
So rather than buying it new, but it's great for that research piece. So I do wonder like how that's massively gonna impact us next year. But Any more predictions?
I'll say WhatsApp again. I think that's growing and will become used more as a channel. And I'm hoping more brands will kind of pull out for brand value reasons and not take part.
I mean, we're already seeing the impact of AI generated summaries within Google PPC, local listings taking a hit. We're seeing a lot of, framework playing around on Meta with the AI summaries as well. So I think even the most simple kind of almost gentle input from AI has a big impact on the way that people interact with ads, people interact with websites. So I think hopefully it just happens at a really slow pace. We can all just kind of analyze it and figure out what's going on with it, and hopefully it won't make life too hard.
I think for me, the ads thing in ChatGPT is going to be very important, because what I'm concerned about is that on the one hand, look, like you said there, Paul, you can go on, you can use it to get through to a product. But if ChatGPT are doing sponsored returns in terms of their output, does the validity of that get questioned more by the consumer? And then do they then go to the site for due diligence? And secondly, as well, is that with obviously the returns that are given to you within ChatGPT LLM, are you then also getting the best price for that you could then get elsewhere? So I don't think front ends of sites are going anywhere soon, but I think maybe that they would potentially be used more of a trust factor, due diligence factor, than a pure, way to get people to check out and pay. But again, I think it depends on the way that ChatGPT attack ads and what people's perceptions are of it.
I think we're going to see a massive change in 12 months. It's going to be huge. And I think, you use the term inflection point. I think we're probably there. We just don't really know what's going to be the lay of the land next year, do we? So it's going to be interesting. Just to sort of put a cat amongst the pigeons, what's the most important channel in marketing? Don't answer that. I'm just joking. Listen, guys, thank you so much for joining me today. I think it's been really important to have this discussion, because I don't think many marketing teams get together like this and we deconstruct Black Friday in a sort of constructive way, if that makes sense. So thank you so much for making the journey and talking to us. And I think everybody who watches this will find it really useful. Just to sort of go around the table, if people wanted to get in touch with you and speak to you directly, where can they get in touch with you?
LinkedIn, reach out, growthsociety.co.uk. We're also turning this, which has been a very time-intensive and physical exercise, into a digital insights product as well, which we're aiming to launch Q1 next year, and it's going to be called Growth Signals. So a little plug there, but hopefully lots of insights and learnings to share with the wider e-com community.
Amazing.
I'm on LinkedIn too, Hannah Spicer, and my website is hspicerconsulting.com, where you can sign up for my weekly newsletter, which has lots of tips and best practice for email.
Wonderful.
And Adam Pierce, again, on LinkedIn. And if you go to the blendcommerce.com website, there's actually an AI benchmarking tool on there you can use to look at how you compare to your peers as well.
Yep, Carl Sandor on LinkedIn every 3 months. And probably has to get in touch with me there. Yeah? So don't be getting in touch with Paul, but yeah, the website, www.thegrowthguys.co.uk.
Excellent. Thanks, guys.